is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Anshuman Sinha, an active entrepreneur, investor, and tech-driven fundraising leader with extensive experience in building and supporting startups across the U.S. He co-founded startup Steroid. Anshuman, thank you for joining us.
Thank you so much, Hal, for giving me this opportunity to talk to your audience, and I'm looking forward to the show today.
Great. So where are you calling from today?
I'm here in Los Angeles, so I'm just between Irvine, the new startup hub, and Los Angeles. So I'm right in between. So
Great.
25 miles to LAX, 20 miles to Irvine.
Well, tell us more about the mission and impact of TiE SoCal and developing the Southern California startup and investor ecosystem. How's that going?
It is going fine over there, Paul. TiE is a global organization. We are in 14 countries, having 68 chapters, 3,000 plus accredited investor. In the last 32 years, we have invested over $1 billion in startups. One of the pillar of TiE is investment, and that is growing very, very fast. We do international investment as well as local here in the US. There are 24 chapters here in the US, and we have a very active deal syndication that we do. And each chapter writes about $50,000 to $150,000 check. But once it is open for deal syndication, we have seen check size going into million to million, 2 million, 5 in a startup. We are industry agnostic. We just try to shy away from some of the blockchain technology and crypto. But other than that, and cannabis, we don't invest in cannabis companies. But other than that, everybody is welcome. We use a centralized deal flow system, which was developed by us, startup Steroid, globally, and all the deals come there, and then each of the chapter will get the opportunity to look at those investment opportunities.
Good. Well, let's talk about Startup Steroid for a few moments. How's that going with streamlining the investment process for angels and syndicates?
Yeah, Paul, very good question. Thank you for bringing that up. The biggest part is deal syndication. We are giving a platform to startup founders to apply at one place and then send it to various other chapters, which are part of the ecosystem right now. TCA Venture Network is part of our startup Steroid deal flow platform. So is Kiritsu of SoCal on there. And we are making inroads in many investment groups, angel groups, family offices, and investment clubs. And the beauty is there are two aspects of it. One, it helps angel groups, organizers to look at the deal flow and take them through the process. And another one we just launched, which is a ready score. It is for startup founders to see, complete their application, get their ready score to see how ready they are to be in front of investors.
Well, good. Well, we've seen angel groups evolve over the years, and it seems like they're moving from traditional models to more tech-enabled syndication platforms. What are you seeing there?
Yeah, absolutely. Deal syndication is the way to go. Everybody doing their own due diligence, everybody doing their own deep dive calls will take time, and it takes away the time from the startup founder to build the product services and chase the new sales. So in TiE, it is very beautifully done that if one chapter takes the lead, all the other chapters will get to view the deep dive call details, transcriptions, as well as the due diligence report. And then the deal syndication and investment into that startups become much more faster. Same thing TCA Venture Network is doing these days. Kiritsu has been doing that. Pismo Ventures, Octane. Everybody is partnering with each other to bring the capital needed for these startups to be successful. So deal syndication is the way to go.
And so how would you characterize the cost savings and time savings with the standardization and interconnected deal flow? How much time do you think we're saving on that compared to what we used to do, say, 5 years ago?
Yeah, absolutely. I have seen a typical deal closing which will take anywhere between 3 months to 6 months. to from the startup founder when they apply to get the first check or the first tranche of the check. The deal syndication I have seen, we are closing a deal within 3 weeks. With one chapter or one group, they could be open for 45 days or 60 days. But once the deal has been confirmed that, okay, we are going to write the first $50,000 check, the other people, the other clubs join in, and that reduces the time. And the biggest thing, it helps the startup founder in saving time and focusing on what they are building rather than just investing 40% of their time in chasing investor to get on the investment call or to get on the pitch day, demo day, whatever you may want to call it.
Great. Well, so for TiE SoCal, how do you guys identify and support the founders? What's your criteria and how do you source the deals?
So the deals comes through our digital marketing effort, and we also get deals through our syndicate arms. You can forward a deal to us. Same goes with Kiritsu and the other groups that we work very closely with. Other than that, the process is very, very simple. They apply, they get rated using the ready score that we have built, and then somebody from one of the groups will reach out to the founder to set up a pitching event. Now we are also doing a very focused, dedicated pitching time every month. Like, SGC Angels, I'm a general partner over there. We do two pitching event on the first Tuesday and second Thursday and the fourth Thursday of the month. And there will be 10 companies who will be pitching. And if we have enough interest from the investor, then we very quickly go into a deep dive call, from there to due diligence, term sheet negotiation, and investment. So we are trying to bring the total investment time from 12 weeks to about 6 weeks right now.
Well, let's talk about investor education. How's that going these days with the angel networks? Is it actually increasing? And what are the best practices for providing education to angel groups, particularly new angel members?
To new angel members and to the angel groups which has just been formed, I feel ACA is doing a very good job in providing educational material through their website, and people can sign up there and get the information. Angel Capital Association, they are doing a real good job. Other than that, I always tell my fellow early stage investor to join a group, be it 10 Capital, be it TiE SoCal Angels, be it Kiritsu, and go through the process. TCA is putting out a lot of content, and so are you, Martin. People going, looking at the videos that you have created, the FAQs, that helps I start a founder, the angel investor, to come and work very hand in hand to some experienced folks. But you have to have a leader in each angel group, otherwise the angel program will fail.
Right. And just to piggyback off that, what do you see the role of AI is at this stage of the game for investor education or even angel group management? Where do you think it's going to be most impactful?
I was just talking to a micro VC firm this morning, and they have been using AI to do the primary due diligence on companies. And from there, then they go into, so it is not that the human capital is moving out. It is just another tool which helps you tremendously in doing your research on a company. And the crawlers that the AI engines have built, they are so fast. You put a pitch deck on a program, ChatGPT or cloud, whatever you want, ask them to do a research and analyze. You will be amazed by the results that you get
Right.
very quickly in less than 30 seconds.
Right. Well, is there a concerted effort to standardize on a due diligence platform in the angel groups in your network, or is everyone rolling their own?
No, there is a lot of discussion going on that rather than everybody making everything, why don't we collaborate and come up with a GPT that is at least be useful in the Southern California type of angel groups who have a very different approach to investing. And we are early stage investor. We are not here as a Series A or Series B type of investment. So, our due diligence is also very different. Our looking at a startup founder is very different. So we are working together, Pismo Venture, TCA Venture Network, Kiritsu, Connie Harrell, TiE SoCal Angels. We are partnering to bring the best out of the education or the knowledge base that we have. Think about David Friedman, think about Connie Harrell. JJ Richard. These guys have a wealth of information. U-Haul, you have been doing this for last so many years. $900 million in investment that you have brought to your startups, right?
Great. Well, if we take a step back and ask what's missing in the current angel investing infrastructure and how tech platforms can fill that gap, what would you call out as the missing pieces that we should be working on?
The missing pieces, I still feel that the syndication has not been standardized. Everybody have their own different type of intake forms that they take. Unless the majority of the angel groups come and join a deal flow platform where everybody can see all the information that the other party is seeing, then only it will work. Otherwise, if I have to deal syndicate with somebody and they are not on the same platform, then it is additional work for the startup founder to go and create their whole profile at a new platform. And it could be a Airtable, it could be something else. Then it is a hassle. If everybody comes to the same platform, the life will be much more easier for all the parties involved.
And then what do you think about investing globally? I know some groups are now working with other angel groups in Europe and Latin America and so forth. What do you guys see there in cross-border investing and global collaboration with, other startup ecosystems?
I know a lot of angel groups and micro VC firms from India who are coming and signing up LPs here in the US market. Same thing is happening in Europe. I have seen angel groups and accelerator going to India and Europe, uh, and branching out there because opportunities are all over. You cannot just be in your cocoon that I'm going to. So obviously, the cross-border investment is going to grow bigger and bigger because I feel the valuation of a company outside the US boundaries is much more affordable, at least from the angel point of view. And then everybody wants to sell their product and services here in the US. So then the US counterpart or the US LPs can help those companies in bringing those companies' product and services platform here in the US and help them grow here.
And so how many deals do you think the Thai SoCal Angels have invested into India companies directly? So from the US to India, and just as a little unit economic story there, how many deals do you think you guys have done so far?
So far in the last 2 years, we are starting at 26 investments in India.
Wow. And if you have a dollar amount that goes with that?
The largest one was $2.3 million,
Mm.
and majority of them are in the range of $250,000 to about $350,000. But that is a lot of money when you convert it into the Indian currency.
Well, most U.S. investors are looking for a Delaware C corporation, a legal entity in the U.S. They're concerned about the European entities and the others. Is that not an issue here with India?
No, the issues are still there, and all majority of these companies, except two out of the 26 deals, all are Delaware C Corp.
Okay. So they're built in India, but they're legally housed in the U.S., so they get past it that
Yes,
way. I got you. Okay. You think
and
that's a
and
trend we're going
the
to see continue, develop in a lower cost way, but get a U.S. legal entity for it?
Yeah, yeah, absolutely. The setting up a US entity and managing it, it is much more easier nowadays. There are attorney groups, there are online platforms which will help you do that. In fact, one of the service offering of Startup Steroid is creating a Series LLC, which is the Series LLC, and then invest into those companies. And the SPV business has picked up because it helps smaller check size to come do a syndication and be a single line item on the cap table. So it helps tremendously.
Well, next question is, what's your advice for first-time angel investors looking to join or start a syndicate in today's market? What do you tell them to do before they jump into that syndicate?
Basically, join a good angel group or an investment club, start attending those meetings, give some time and go through the pitch events as well as the deep dive calls, due diligence meetings. There is so much of learning that, I call them elders in the group can guide you to become a more knowledgeable and impactful angel investor.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I think we covered a lot today. What I would like to do, Hal, with you is to maybe start doing some kind of a LinkedIn live event or ask me anything type of event where we can attract international pool of startup founders. Because think of it, someone building something in Australia or Germany might not understand the US market at all, but their product could be a right fit for the US. So we have a responsibility to those founders to grow to their potential. And we can do that by churning out some information out there in form of AMA and all those things where they can join and ask real questions to the real people.
Well, I'd love to do that. Let me know how best to help. We have lots of content and lots of experiences to share with other people. If you have a list of topics, that'd be a good way to kick it off. Love to do AMAs, ask me anythings with these topics. So let me know how we can help.
Yeah, sure. I will reach out to you with that, with a plan.
So for the listeners on our show, what's the best way for them to contact you?
My cell phone number, 714-504-7434, and through my LinkedIn. I'm pretty active on LinkedIn. Reach out to me. It is LinkedIn/in/Anshuman Sinha 1, and you will find me there.
Great. We'll include that in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Absolutely, Hal. It has been my pleasure talking to you. Thank you so much for having me on your call.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. TiE Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.